Good morning, everybody. It is Wednesday, February 19th, and we're going to start our prep today for the ES. Were you ready for the likely close at the highs and the rally from the lows yesterday? We'll dive into a little bit of what happened yesterday and get prepared for today. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So if we look at what happened yesterday, we had our insurance play again ahead of the lack of catalysts, but what was used was the bond auctions and the Trump executive orders at the end of the day. And so everybody was buying insurance early in the morning, which was continually putting this downward pressure into the markets. There's also a big catalyst today at 9 a.m. Eastern that we would want to pay attention to that's typically not followed on financial media or a lot of uh, news sites, and that is the VIX expiration, because that is where a lot of traders have to roll over their positioning. So that is one that we will pay attention to. But everybody was buying insurance into the afternoon. And then once the bond auction came out at 1 o'clock, we made our move lower, bottomed into the market, and then rallied on the end of the day move ahead of Trump's executive orders as the positioning said that we can't go any lower. Everybody's protected. So again, we see the same thing play out in that same cycle of rinse and repeat. And there's a few other things that we look at that we went over with our students midday that gave us about a 90% chance that we would close over 61.40. So if we look at today in our positioning, our systematics have come back in with a very small bid of about $1 billion, and they turn into sellers if we get up to 61.77 and above, or they become sellers if we get down to 60.85. So they are neutral and slightly supportive today. Our market makers are in their risk compression mode as we are over the line in the sand at 61.07, which is also near the low end of our range. So again, if we come down there, we will watch for large capital to get deployed. We can also look here at our structure on the right-hand side of our chart and look at where the bids are. And under 60.89 is where we get our first offer. So if we do make any kind of extended range break underneath our line in the sand, 60.85 has kind of our last bid. So go back to our CPI day and you'll understand how we use these when we pay attention to them. On the upside, our market makers begin selling at 61.90 and 61.88. That is where we expect them to be fully invested. All capital has been deployed and where they will introduce supply to the market, which is right up at our upper end of our range today. Just above our upper expected range is where we have those uh, that structure, that supply coming in. So those are the two things we really want to watch today. And we will also watch our insurance play ahead of the FOMC minutes at 2 o'clock today. Outside of that, there aren't really any major catalysts today. For the week, our biggest catalyst is going to be consumer sentiment on Friday at 10 a.m. So, again, that's where our insurance play will come in. And tomorrow, we will see our systematic side put a large bid in the market. So, with commercials and market makers aware as they model the same portfolio, they will know that there's going to be a bid that they can either distribute into or use to push the market up ahead of Friday's consumer sentiment report. So that's what we're going to watch for today is the setup ahead of Friday. And we will also watch what happens at 9 a.m. as that is going to give us some good signals throughout the day. And then that repositioning, just like what happened on the Fed day in December 18th and in 2023, when we had the exact same repricing model at the end of the year. This won't be as drastic for the expiration day, but that afternoon period between 12 and 1, right ahead of our FOMC minutes, is when we start to see that repositioning come in. That's what we're going to watch for on today's docket. So have a great day and stay safe trading out there, everybody.